Good morning, it's Friday, November 15th, about 6 a.m. Central Time. Overnight, the precious metals are higher after yesterday's price capitulation and bullish hammer candlestick pattern. Now, what is price capitulation? It's an extreme point of panic selling where investors are willing to sell their assets at any price, resulting in a rapid decline in prices. Now, what is the bullish candlestick pattern that I'm talking about? If you look here, this was last Friday, and as we go into Monday, Tuesday, Wednesday, the sell-off, this is in the copper market. Yesterday, we see a big breakdown. We touched $4. We rejected that level, closed near the high, and then today we're starting to take off. A couple things to note about this particular pattern. You'll see technicians come in. They'll start to buy this market with stops below this level in anticipation that the pattern continues to the upside. Remember, when it comes to futures trading, it's not just the fundamentals, it's not just the why. There's many technicians that come into this market and they help propel prices to the upside. You also have momentum traders and chasers come into the market as well, and that's what tends to fully develop a lot of these different patterns here. So if you look at the trading day yesterday, it was really broken down into three segments. There was that washout, especially in the silver market where prices dipped below $30 here. Many of you that are trading futures contracts had those resting GTC orders that I've seen and were able to buy below $30 on that washout. So congrats to you buying below $30. That was a great buy here and a solid buy in my opinion. Now we saw this cautious rise throughout the session and this slow grind higher. That was kind of the second element of the trading day. And then finally, his Fed chairman's speech that really got markets going again here with a bit of increase in volatility. So the data that came out yesterday, the PPI data, market participants didn't react to it. The focus, and especially with the US equity markets, was solely on Jerome Powell and the speech that he had. Now, stocks were already lower coming into the speech. However, they picked up steam after he began speaking right around 2 p.m. We saw short-term treasury bond yields. They started to move back higher. Traders had priced and pulled back their interest rate cut expectations. Gold futures slipped a bit, but the markets, they got to consider what the growth impact would be from a higher for longer standpoint as far as the US equity market. So if you remember, the Fed had cut 75 basis points in September. They lowered that target range to about 4.5 to 4.75%. So Powell, when he started talking about the economic data yesterday and the state of the economy, he didn't really give any signals here that they're in any kind of hurry to lower interest rates. So you go to the CME's Fed Watch tool, and that's one of the things that we reflect on every single day. So make sure you bookmark that, Google CME Fed Watch tool, and add that to your favorites list. I pull that up every day, and I also really look at the rate of change on it. So if you look back on like Wednesday, it was an 82% chance that the Fed would cut rates 25 basis points at that December 18th meeting. Now it's only about a 58% chance. So the interest rate cuts, the bets start to come off a bit, and it's going to weigh in on the growth of the economy because they were really waiting for the fuel of those interest rate cuts with President Trump's tax cut initiative and things like that, and the growth really starts getting going and the inflation gets moving higher. So with that being said, that the Fed's not going to do anything, it weighs in on the stock market, and that's why we're seeing more of a muted reaction in the gold market overnight. Gold's not really able to get its legs, and you start to look at the price. So getting in the overnight price action, December gold up $1 right now, 25.73 last, high 25.78, low 25.58. You get into the silver market. Now these are where things start to improve. Silver up 16 cents at 30.73, just off the high of the session, which is 30.86. You get into copper. Copper's up 6.65 at 4.15. That's up about 1.5%. Aluminum up 6.5% right now at 26.19. Platinum up $10. That's 1% at 9.54. And palladium futures at 9.61. We've been watching that platinum palladium spread for a few days right now. I oftentimes tell you that we don't see palladium futures trade to any kind of extreme discount to the platinum market for any kind of extended period of time. It's not a trade recommendation where we see that disconnect to just go in there and buy it. It's just something that we observe on a daily basis here. Now you look at that steel, aluminum, copper, those all making these big moves to the upside. And why is that? Because it's all things China overnight. So Chinese steel output recovered in October here, it had snapped 4 months of declines. You also saw the Chinese finance minister, he ends some export tax on aluminum and on the copper market. Chinese stocks, especially the real estate market, saw one of its largest improvements of the year. Chinese electricity demand also grew in October, but the industrial output, it did slow a bit. If you would have got that industrial output going a bit higher, you'd really see silver futures up, probably about 50, 80, and ending up the day up $1 and probably closing on the high of the day. We didn't get that industrial output data that we needed. But what happened from all these other elements here? We saw Citigroup, they turned more upbeat on China's 2024 growth after this kind of stimulus push that they had done, and then they upgraded their growth forecast to 5%. So we're going to see other banks out there, other major financial institutions, they're all going to maintain kind of an upbeat rhetoric on China here. We're also seeing BABA overnight pushing up as well. So among other things, we got aluminum output increasing 1.6% and close to a record set in August. So if you look at the daily chart pattern, pull up one on our aluminum today, you're going to see it really push to the upside here. Now, we're going to want to keep an eye on some of the data in the US here because we'll have some things that are a bit sensitive to the market, especially things like retail sales. They come in weaker. You might see those expectations for the interest rate cut come up. You'll see a small recovery in the gold market. You'll probably see US equities come up as well. We'll also have some manufacturing index. We do have a Fed speaker coming out. We do have industrial production coming out. So it's a number of different things. Now, something to note here is that copper futures are right near kind of the volatility adjusted model that we've seen over the last few days. So if we see this break over 418, you're probably going to see silver futures push up, and the high on the upside here on silver would be right around 3150. But again, it's going to take a few more elements in the markets in order to get silver futures up to that level. Something else to note, the disconnect between Bitcoin right now and the S&P 500. It's nice to see a small disconnect there and Bitcoin to operate as its own element, trading on either side of about 90,000 at the moment. You guys got any questions? Give me a call. I get a lot of people that reach out to me specifically about miners on precious metals miners and things like that. We do incorporate those things on the wealth management side because of the fact that oftentimes they keep up with inflation. They provide a good dividend yield and things like that. But I don't particularly speculate in the mining markets, in the small miners, the junior miners and things like that. I had a bad experience with one where it went from $2 to $25 and then it collapsed to zero all within a few days because it was nationalized. And then secondly, the miners are just unable to bring up a lot of free cash flow, and any kind of free cash flow they have is not being returned to investors. It's mostly being used to buy other projects out there, and the other projects that I'm seeing, it looks like a lot of misuse of cash and things like that. So that's why I think that the miners are really lagging. And if you really trade miners, you should watch like a show like Gold Rush. It's just a riot of the calamities that go on, and I think that those calamities are real life examples of things in the headwinds that many of these miners have. Plus, with high input costs and things like that, it's very difficult. So I often ask people, you know, I'm not bad-mouthing miners. I think you should have a small allocation to it. But if you want to have physical metals as well, I understand that. Everybody should have physical metals, but you should also consider incorporating futures into it because of the fact you have the 24-hour flexibility. You've got the ability to adjust the leverage you have on those markets by increasing the capital that you have in your account in relation to what the underlying asset's notional value is. And it's also tax efficient, much more liquid. You could buy that silver below $30 yesterday on the December contract, and you can get the warrant for it if you want and continue to hold it in the exchange for any kind of long duration of time. So that's my small pitch on the commodity markets, on the futures markets, as opposed to, you know, holding things like a massive basket of different mining stocks and things like that. It just seems like too many things to juggle here. So if you got any questions, give me a call, 312-858-7303. You guys have a great weekend. I'll be on the Schwab Network later on today, hopefully talking about these metals markets, and I'll actually be on an Italian TV station here. And no, I don't speak Italian. They came out to me. It's an English-speaking financial news network for people that are over-located in Europe. So you got any questions, give me a call, 312-858-7303. Remember, futures and option trading involves risk of loss, may not be suitable to all investors. Good luck, good trading.